Alright, so today I'm going to talk about the Vanguard Wellington Fund. It's ticker symbol VWELX. This is a balanced fund, and it's pretty much my favorite fund for mutual funds. I've got the Morningstar ratings pulled up here. As you can see, basically, it's a 5-star rating, which is the absolute highest rating you can get from Morningstar. So any fund with a 5-star rating generally means it's a pretty good and safe fund to be in for the most part. So a lot of reasons why this is my favorite fund. Number one, it's withstood the test of time. It's literally been around since 1929. I mean, so it's got literally 90 years of history behind it. A lot of things have happened in 90 years in the stock market, and this one's always pretty much stayed on track very well. Like, for example, in 2008, when the S&P 500 fell off a cliff like by 40%, the Vanguard Wellington Fund only took about a 20% hit, roughly. So it literally is about half the amount. So in the bad times, it can definitely help mitigate the damage done to the portfolio. But in the good times, it still performs very, very well. I believe this year it's still up like around 12% this year, which is very, very good. I've been in this one for basically about a year now, a little over a year, so I haven't had a whole lot of time in it, but my time in it so far has been very, very good. I literally plan on keeping this fund forever, literally. I mean, honestly, if I were to foretell the future right now, I mean, I would say when I'm close to retirement age, I would have like pretty much a very high portion of my money in this fund, and then I'll set it up where I can just withdraw X amount of dollars per month. But at the same time, you're keeping money in there to keep that fund growing and, you know, continue it to make money for you. So yeah, literally like around that time, I will probably have like literally everything in it. I've got a good amount of money in it now, but I still also like some money in some other growth funds as well, like the T Rowe, their blue chip stock growth fund. I mean, that would be my second biggest fund. I mean, because that gets a lot of growth in that. So that's, since I'm younger, I'll be 34 this year. I'm still going to keep that around for a very, very long time. But as we all age and stuff and get to retirement, this fund is just really, really tough to beat. And it's pretty much invested in basically 65% bonds, roughly, and about or excuse me, I said that wrong. 65% stocks, 35% bonds. Once again, 65% stocks, 35% bonds. So it's what they consider a balanced fund. The other thing I like about it, the expense ratio, which I'm highlighting here, that's way less than a lot of other funds out there. This particular one, this is 0.25%, and then once you get over 10 grand in there and go to the Admiral funds, it actually drops down to, I believe it was 0.17, so it goes even lower. But 0.25% is extremely low. Like that T Rowe fund I was mentioning, that growth fund, that's around like 0.70%. So I mean, that's definitely higher. Still low, but not nearly as low as this one. So I mean, that's another reason to like this fund. Very, very, very low fees. And the total amount of assets in this fund, $105 billion. I mean, that's obviously a good amount of money. So therefore, you know, a lot of people believe in that if there's that much money in this fund. The yield, or the dividend yield, you get paid basically 4 times a year from this fund. Basically, in simple terms, it's once every 3 months. The yield right now at the $42 stock price is 2.55%. So basically, what that means, if you take 42 times 2.55%, that is $1.07 right now. So for every share of this that you own, you will get $1.07 divided by 4. So if you take $1.07 divided by 4, that's 26. Basically, it's going to be 27 cents per quarter. So if you want to do just easy figures, you get $1.07 every single year for each and every share you have at these current numbers. I mean, these certainly can fluctuate, obviously, but as of right now, for every share that you own, you will earn $1.07 per share per year, or in simple terms, if you want to break it down by the amount per quarter, it's 27 cents right now per quarter. So not a bad little yield, really. I mean, that's better than a lot of blue chip S&P stocks. I mean, there's certainly stocks that do way better dividends. This is not a fund you're in for the dividends, that's for sure. I mean, there's definitely better funds for that, but it's still a very respectable number, and it's again, like I said, better than a lot of well-known stocks out there at this time. So great fund. I just like I said, I can't say enough good things about it, just because of like I said, my biggest reason is it's been around from 1929. It's withstood the test of time. I think it's a good fund for every investor, literally, whether you're 18 and putting money in now, or you're 75 and got money where you want to put somewhere. I don't think you can really go wrong with this fund. It's fantastic all the way around. So definitely my favorite fund, mutual fund in the stock market, and would highly recommend it. So also too, many are predicting in 2020 that there'll be a downturn in the market. I mean, a lot of people are predicting right around the presidential election, or a lot of people are saying if Donald Trump gets elected again, things might stay well for a while. But if he doesn't get elected again, a lot of people are saying, the stock market could fall off a cliff, and it could. I mean, it's anything can happen. I mean, everybody's just predicting, but this Wellington fund is kind of built in where it can mitigate those bad times, which is definitely what you want in seemingly uncertain times. But again, if you listen to all the noise out there, it's just kind of like, one day they say one thing, one day they say the next. I mean, this is not a fund you put money in for a couple of months and then take it out. I mean, this is a long-term fund. This is one you keep adding money into as you go on, and then when you retire, this is one you would take money out of, but keep the fund going. I mean, you keep money in this fund at all times to keep it growing and keep making you money. If anybody watches this and agrees or disagrees, or has any comments about it, I would love to hear what other people think of this fund. I've talked to a handful of people about this that I felt knew quite a bit about what they're talking about when it comes to the stock market, and pretty much so far everybody has agreed with me. They've all pretty much said that, yeah, this is a good fund and there's really nothing not to like about it. So be interesting to see what anybody else thinks about it. So let me know what you guys think. I probably will make more videos like this about maybe some other funds, or just general talk about things from what I know, but I'm certainly no expert and don't claim to be. I'm still learning a lot of things myself, but this Wellington fund, like I said, there's really nothing not to like about it from everything I can tell. So if you got any questions, comments, let me know, and thanks for watching. We'll see you in the next one.